Okay, this is a good one. So, as I post a lot of the properties that we purchase and as I share the purchase prices, one of the main questions that I get is about loans on properties with a low value. And this is not that hard to answer, but there are banks out there that are willing to give loans on properties that have an extraordinarily low value. The second property that we purchased, I had a $21,000 loan on that, and I got it from one of the local credit unions. So I think the larger banks that you deal with are the ones that are going to have a higher loan to value that they have to see. So they have like a minimum $70,000 loan amount. I've seen as high as a minimum $140,000 loan amount. At one point, as if you're a real estate investor investing in a kind of a depressed market or one that just has lower property values, then the bigger box banks aren't going to be your friends. You're really going to want to go out and find some local credit unions, some small regional banks. Huntington Bank has done a couple for us. They're a larger regional bank, but they're still local enough and small enough to do that. And then other than that, I would say that we have probably one or two loans with just about every single local credit union here in the area. So the smaller the bank, the more familiar that bank is with the area, the better when it comes to getting loans on low property valued investment properties. I think that's about as easy as it gets. And I often share that just as I'm out here feverishly looking for new properties to purchase, my brother is just as feverishly looking for lenders to work with us and ones that are interested in our business model and what exactly it is that we're doing. And because it's the financing piece is very important and each lender kind of makes their own rules, we definitely keep an eye out. And as we are buying properties, we have sometimes molded our buying criteria to fit certain banks. And when I say that, I can think offhand that we have at this point 10 or 15 properties that we have purchased specifically to fit one bank's kind of lending requirements because they want, over $100,000 property values and they're able to give like a better offering. So, kind of figuring out, getting a feel for banks and figuring out what best fits their program, and then figuring out how to build your business model or a part of your business model into their lending things just to make it a very frictionless interaction, I think is a solid deal. Otherwise, with these local credit unions, these low property valued homes, it's completely possible. However, it's a really tough thing to scale. So if you're looking to buy, more than 10 or 15 of these, then you're likely going to have to get pretty creative. One of the lenders that we regularly refinance big packages of properties with, we kind of make sure that we have a good mixture of properties that we've purchased for 30,000, properties that we've purchased for 80, 90, and hopefully the average is higher than their like $75,000 minimum loan amount per property. So there are some creative ways that you can do it, but as you're in the beginning, as you're just buying 25, 45, $50,000 properties, your best bet is to start forming relationships with each of like the commercial lenders or just like the mortgage loan officers of these smaller local credit unions. And one of the things that you're going to want to make sure of at these local credit unions is that they're going to keep them in their portfolio. If they're going to try to sell them to the Fannie Freddie loans, then they're going to have a much more strict criteria that they're going to have to hit in order to sell those over. So they're going to be able to make more decision. They're going to be able to operate in a little bit more of a gray area, and they're going to be able to help you out a little bit more if they're holding that loan in their personal portfolio. Now, one of the reasons that scaling this isn't always the easiest is a lot of these smaller credit unions, when they hold things in their portfolio, they don't want to have too big of an exposure on any one individual. So one of the smaller banks that we work with, they have a maximum loan amount of $300,000 to any one individual at the bank. So as soon as we had $300,000 of property financed with them, we couldn't get any additional loans for them, no matter how good the deal was. So one of my favorite sayings is he who has the gold makes the rules. And with banks, that could not be more true. Each bank has its own rules. Each bank is willing to make its own exceptions. Each bank is willing to operate in its own gray area. And as somebody that's interested in building up a community, from stabilizing and improving these lower valued homes and getting loans on them, you're definitely going to want to get creative, get understanding of these local credit unions and what their guidelines are and how to operate inside of those. Thanks for watching that clip. I thought that was a good question. And I think you can ask good questions too. Join us every Friday morning at 8 a.m. Eastern Standard Time for a live stream Q&A where we answer plenty of questions just like this one. In the meantime, consider subscribing to the channel if you want more of this content. And if you want to increase your deal flow, analyze properties better, and help me feed my family, click the link below for a free 7-day trial of PropStream.